master plan. Sorry? Class preparation.
Everyone thought like this or post party or something. No, he has all faith. He has prepared for like another Muslim name, Muslim lawyer, but he is singer. And so his girlfriend also same. He has prepared himself.
He's the one who's been that book.
Yeah, inside the book, there's a movie, movie, like all about the same thing that he was did. Yeah. Inside the book, he like cut the pages and make a gun shape.
They have come like 2-3 times for course.
Yeah.
Yes.
Experience.
Yeah.
From the help of anyone.
Yes, they want to take experience from
Without
side of books.
that's just yes. I would like because the argument they want without it's a world is not. You get which you figure out many of them question where I didn't never.
Yeah.
Near me is like walking distance from Lucia's church. You say, it's strange. No, that's long down. Like Jana. I feel long down, but it's because they it's no how they do this Jana. I used to love Jana. Yeah, my question. I and yes, that is after we have to do in the beach, they want to be like the beach then what happened? He like shoot on another guy. He ran away. Then police line tries to him and police line shoot on his advisor. paper, you have to print out. Check.
Ah, yeah.
The question number 180. Yeah, capital gain tax. What is capital gain tax?
Sure.
Sure. Okay, can you tell me the page number? Capital gain tax versus the question I asked you all to do. I asked you to do Ruby. Ruby, right? 185. So it is 108. So let's go to that question. Oh my God. Can't we have a shortcut to go?
Page.
Yeah, what's the page number? 160? 68. No, where can you type the page number? No. I think we can. I need to find that. So, okay. Anyways, I'm closer to the question, I think. 120. What's the page number? What's the page number? 108. Then I need to go far. 96.
Okay.
Yeah. So 108 Ruby. So let's work it out. Everyone can see my screen, right? Fine. So you should assume that today's date is 1st of March. Okay, fine. The scenario relates to one equipment. So they are telling that the scenario is related to one equipment. Shall we send the link to the online guys? And is it being sent? in the group for the expert revision session? No, it's not going to be the same link. You see the same link? No, right? I think only Ilma. Ilma, did you use the same link to join? EESP. This is Expo. What's the link you used before the break? The same link you used again? Or then you used the new link? I'm asking from Ilma. Old one. Okay. So can you just forward that link in the group so that others also can join? Fine. So let's work out. So this scenario relates to one requirement. Okay, let's see. You are getting 2 marks for this. Calculate Ruby's capital gain tax liability in respect of the above disposal and state when the tax will be paid. So there are 2 things. Don't forget. You need one thing to calculate your liability. The other thing is to tell them when you need to pay the tax. Okay. So on 27th August 23, Ruby disposed a residential investment property. So Ruby is disposing a residential property. And this resulted a chargeable gain of 41,500. So this is resulting a chargeable gain of how much? 41,500. At the point of disposal, Ruby had not made any other disposal and expected to have the remaining basic rate tax band of 14,185 for the tax year 23-24. Right. So first of all, let's calculate what is the capital gain tax liability. Now, this is an easy question. Okay, so this part of the requirement is easy. So we need to calculate the capital gain tax liability. So the situation A, you need to calculate Ruby's capital gains, the tax position. What? Just started. Yeah. So what is the chargeable gains? The chargeable gains was given to us, right? The chargeable gains was in this situation is 41,500. Now, when it comes to capital gain tax, what is capital gain tax? When you are selling your non-current assets, how much gains you're making. So on your gains, we charge taxes, isn't it? So you are having a gain. They have already telling you you are making a gain of 41,500. So how to find every asset? So every year you will get something called AEA. What is that AEA? Annual exempt amount. What is annual exempt amount? For 23-24, it is 6,000. So all the gains up to 6,000, it is charged at nil rate. It is charged at nil rate. Any gains before will be called as your taxable gains. So the taxable gains is how much? 41 minus this is going to be 35,500. Correct. But don't forget, this is a property. It's a residential property. So residential property income for CGT purposes are taxed at higher rates. So the first what is the percentage they will be charged? What is the percentage they will be charged? 18%. So they are telling that his basic rate tax band, so his remaining basic rate tax band is up to 14,185. So which means only 14,800 and how much? Sorry, 185. Only 14,185 will be falling into the basic rate tax. So that needs to be taxed at 18%, correct? Why 18%? Because in a capital gain tax position, if you're having a residential properties are taxed at higher rates. So higher rates means 18%. All the other properties, 10%. 25% is your corporate tax. If you say that next time, this bottle will come to your head. Okay, fine. So how much? 10%. So why did I take this 14,185? Because that is the only amount of income which is left for him to claim at basic rate. You got it? Because his other incomes are occupying the rest from 37,700. Did you understand that? Fine. So then the balance is how much? This needs to be minus from 35,500. That will be the remaining balance. How much? 21,315. That will be charged at 28%. Very good. So how much is this? 2,553. And this one? 5,968. So your total liability is how much? 8,521. Understood? Yeah. That is different. That is different. That is when you are calculating the tax position for income tax purposes, that residential property income is different. This is when you are selling. Okay. The point that you are saying 175 is a different case. It is not applicable to this situation. 175 is the inheritance tax purposes. Don't confuse them. You did this question? No. You didn't do this question. You did this question. No. Ishaq and who else? Fine. Right. I'm asking you a question. Did everyone get this answer? Were you able to understand what is capital gain tax in this little portion? How many of you all got correct? I mean, only you did, no? Bad question to ask. Right. But did others understood this part? Am I done with the question? Am I done with the question? No. Why? You will gain only a mark here. Because they're asking me another point. I have told you if they are using the word and before that 1 mark, after that 1 mark, not necessarily. I'm saying that before that one requirement, after that another requirement. What is the other requirement? They're asking when will be the tax paid. So how long you need to take to pay this tax? How long? January of? It needs to be 60 days after the disposal. January of the first year, darling, income tax submission. Okay. CGT is after 2 months, means 60 days. Not only for residential property. Yeah. Within 60 days of capital gain tax, once you dispose the asset, they can't wait until January to get the tax money. No. Government will also lose interests, isn't it? So for capital gain tax purposes, you need to take how many days? How many days? 60 days after the disposal. Don't forget this now. So 60 days after now, if you say 60 days after the disposal means you're not going to score. Tell them the date exactly. So it is going to be from tax year, which is April. When you are getting disposed this? 27th of August. From this 60 days is how much? 26th of October 2023. 26th or 27th. Good question. It needs to be a day less. Well, that was the question. I lost the question. Yeah. On 27th, you are paying, which means you need to calculate 27th also. Okay. So which means it should be 26, a day less. 26th of October 2023. Why? What happened? So for residential property, it needs to be due on how many days? 60 days after making your capital. Right. That part was easy. So 2 marks there. So we need to fight for rest of the 8 marks. So it's a 10 mark, I think. It's a 10 mark, right? So now they are asking us, this scenario is relating to another requirement. Ruby's final capital gain tax payable or repayable for the tax year 23-24. If during March 2024, she disposes either one of her shareholding in Polar Limited or alternatively in shareholding Apollo Limited PLC. Note the mark allocation is provided as guidance for this regard. So now we need to determine the share disposals and how it is being taxed. Okay. So to determine that, so let me read shareholding in Polar. So Polar is an unquoted trading company in which Ruby is running 10% of the shareholding. The shareholding was purchased on 14th July 2014. So you are purchasing the share on 14th July 2014 and could be sold at a gain of 37,300. So you can make a gain of how much? 37,300. Ruby has been employed since 2012. So that is all they are giving in terms of Polar Limited. So based on the available information about Polar Limited, Isha, correct me if I'm wrong. So you are the lecturer now. You need to correct if my understanding is incorrect. So I need to understand if the disposal happens. Correct? If the disposals of the shareholding at Polar. So if I'm disposing the shares that I'm having at Polar, first I need to understand what is qualifying, isn't it? And what is not qualifying. So the ordinary shares, you have ordinary shares, right? So you had ordinary shares in Polar, how much? That can be sold for 37,300. Correct? So you had 37,300 and you had your residential property. So that will be not qualifying for BADR. You know what is BADR? That's how much? Residential property, 41,500. Okay. So this is how I need to relate it. So then the taxable gains in this position. What is BADR? Business asset disposal rate. Business asset disposal rate. Rate or relief. Wow. That's why I didn't give you that. Rate or relief? Who is saying relief? Who is saying rate? You're saying rate. It's a relief. It's a relief which is given when you are disposing. So we call it as BADR. Can I use this term at the exam? Yes. Very good. Now you remember. Now you understood what is qualifying for BADR and what is not qualifying for BADR. Okay, fine. So shares will be qualifying for BADR. What is that BADR now? Business disposal or disposal? No, assets disposal relief. Fine. Now, when you are now this is the rule, okay? It's one of the tax rules in terms of shares. When you're disposing shares, there's a relief when you're disposing called BADR. So you'll be getting that relief for all the qualifying shares that you're going to issue. So it's an ordinary shares issue. So you're selling it, so you will get qualified for that. But your residential property will not get qualified because it's not issue of shares. Fine. So now what you need to understand is at this position, if you are disposing the shares of at Pola, so you will have 37,700, 300, no, my bad. 300, right, Ishak? 37,300, and you have how much? 41,500. Can I take this 41,500? No, don't forget to remove your AEA. Can I give AEA for qualifying assets here? That is 0. Don't give it to the qualifying asset. Claim it from the not qualifying ones. That's how much? 6,000. So your taxable gains is how much? 35,500 again. Correct? So the taxable gains is how much? 35,500. Right. So now, if this is the situation, okay, you need to understand your 37,300. I'm talking about the tax liabilities, the tax position. So what is the tax position? Up to 37,300, you will pay tax at 10%, correct? Because it is qualifying for business disposal asset relief. So you will be getting how much? You'll be getting how much? 3,730. But all the other income, which is 35,500, in this state, it will be charged at 28%. Why 28%? Because it's a residential property. 28%. That will be how much? Shaka, how much you got? How much is that? No calculators. 35,500 into 28%. Qualifying for BADR. And only one whole annual exempt only will give. Only 6,000 for all the assets. Year on year. That's why we call it as AAA. 10,000? 9,940. So now what is the liability you need to make? 0, 4, 3, 7, 9, 7, 16, 1, 14,670 or 13,000. 9, 3, 12. 13,670. Actual payable amount is what? Already you have paid how much? Already paid. That you need to claim it from the previous part. 8,521 you have already paid. But the CGT payable will be how much? The payable will be 5,140. Where did I get this 8,521? I got this 8,521, which I have already paid. So now when you are, now see the next thing, you need to understand when you're disposing the shares at Pola. So they are asking us in the question. So this is what we need to understand. Calculate Ruby's final capital gain tax payable or repayable for the tax year 23-24 if during March she also disposes either one of her, requirement one, okay. One, her shareholding in Pola, or second thing is alternatively the shareholding in Apollo PLC. So this is a what if question. So I'm saying that if this is the situation, this is how much she needs to pay as taxes. The same position we need to understand at, what's the next company? Apollo. No, in this terms, when you're making for capital gain tax, what's the rate? 10%. And yeah. So, okay, 37,700. Now, in this case, you need to take it isolately. If these two are becoming the part, don't take the fully, that's what I say saying in the scenario, this relates to one requirement. So this part is related to only one part of the requirement. The next time you need to assume you are having these shares as well as, see, in addition to the disposal already made on 27th, Ruby is going to make one of the disposal. So either this or this. So along with that, during the tax year 23-24, this disposal will be either Ruby's holding of one ordinary shares in Polo or 50% ordinary shares in Apollo. So this is okay along with the disposal. What if it happens? They're asking what if disposal 1 happens with the property disposal as well, residential property disposal. Now you need to take this disposal along with the property disposal. But what you asked at 185, is that the question, right? Then yeah, 37,300. No, right? Because you are claiming your annual exempt amount. At this point, everything will be qualifying for what? Business as a disposal rate. You're already claiming the other part. Okay. Now what she's questioning is, won't you take 37,700? You don't take 37,700 into this computation because it is based on the CGT rates. Capital gain tax rates are different. You charge at 10% and the highest percent. And this is a residential property. So residential property is exceeding the total income. See, the total income is going beyond 35,500. Sorry, 37,300. Okay. So entire this property's income needs to be taxed at 28%, not the difference of that. Okay, fine. Normal rate, why you take? Why don't you take higher rate of 20%? No. CGT rates, what are the CGT rates? 10 and 20%. So since you are qualifying for BADR, the first part of your share issue is going to charge at 10%. But the residential property is not qualifying. Since it's not qualifying, it should be paid at higher rates. You got it? That is the reason. Qualify is lower rate. If a portion of that income is qualifying, means then it will attract the lower rate. Yeah, fully. So it is not qualifying for disposal. Now this is, you need to think from a disposal position. Okay, let me make it more clear for you. I understood where you guys got lost. So this 37,300 thing is qualifying for business asset disposal rate. So according to the CGT rates, that will be charged at the lowest percentage. That is 10%. However, the other asset, the residential property does not qualifies for what? BADR, which means business asset disposal relief. It does not qualifies for that. If it is not qualifying, that needs to be charged at higher percentage. That is the relief that you are not getting. Yeah, true. Yes. Now, the relief here is, now you might be thinking, what is the relief here? You're not charged at 20%, you're charged at 10%. Do you understand that? So that's the relief you're getting. Otherwise, you don't have a relief here. No? So the assets which are qualifying will be charged at 10%. The assets which are not qualifying will be charged at 28%. Otherwise, it will be unfair if you take the income tax rate, because after 37,700, it will be 40% no. So here you are getting a relief for the other thing also at 12%. If you take in the total comprehensive way. Don't confuse your understanding there. I said 12% taking from 40%. Now you say this 35,500, you take the balance of 400 there, no? That 400 tax that 10%, and why you are taxing the rest at 28%? That's unfair. You got it? So when it comes to capital gain tax, fresh, think fresh. If it is qualifying, you go with 10%. If it is not qualifying, it's going with 28%. Right, fine. Then what's the next one? I didn't read the next one. Yeah. So Apollo is a quoted trading company in which Ruby has the shareholding of 40,000, 50 cents ordinary shares, okay, per price per ordinary share. Ruby received a shareholding as a gift from her father. On 27th May 2017, on that date, the shares were quoted to an stock exchange at 2.12 to 2.24 pounds. The shareholding could be sold for 59,000 pounds. No capital gain tax reliefs are available in respect of this disposal. So when you are determining the answer for this, so in the situation B, in the case of Apollo, this is not qualifying for disposal relief. They have already told us because it's a quoted company's shares. However, the ordinary shares that you are selling is at how much? 59,000. Right. So this will be 59,000. That is your ordinary shares sales proceeds. Ordinary shares sales proceeds. Let's understand this question. So ordinary shares sales proceeds is going to be 59,000. So now you need to determine what is the cost. Then only you can identify how much you are making as a gain, no? Isn't it? Whether you to determine whether it's a gain or a loss, you need to determine your cost. So let's do a working. So determine your price, cost of the shares. So you determine your cost of the shares. You need to do a working. So what is that working? You need to take the average price of the shares that they have quoted. So what was the average price you need to take? You need to take 2.12 plus 2 point what? I can remember 2.12 plus 2.24. Then that needs to be divided by, I say half. So it's divided by 2, right? That's the average. So that will be how much? 2.18. Now this is the cost per share, isn't it? So you had 40,000 shares into 2.18, isn't it? Sorry, yeah, 2.18, right? So this will be how much? 87,200. No, this is the cost of the share. Okay, the cost of the share is how much? 87,200 based on the working. You're making a capital loss or a capital gain. In this situation, you are making a capital loss of how much? 20? Capital loss. We call it as what? Capital loss. So now, what are the next instances you need to take if you come across a situation like this? So I need to get my residential property also into the case, right? So then my residential property is how much? Residential property gain. Is how much? That is 41,500, isn't it? Because in this situation, okay, we need to take the gains. Good question. I will tell when to charge you. Even if you take 35,500, it is not wrong. It's not wrong. It's correct. But entire assets, entire gains is not differentiated between BADR and not qualifying for BADR. Here they are telling that all the quoted shares are not qualifying for that disposal relief. So if it is not qualifying for disposal relief, I can take the annual exempt amount at once. So what I'm trying to tell you is, now you need to determine what is your net gains. Net capital gains. I'll tell you why I'm not using the AEA at this point after getting this answer. Now, what is the answer? You're making a loss from one property and you're making a gain from the other property. What is your net gains, capital gains now? $13,300. So this is your net capital gains. Now you need to see, through one asset, you're making a capital loss. Through other assets, you are making a capital gain. So you can net off. You can net off. And then you pay your annual exempt amount. Even if you take 35,500 there, still you're going to get the same net answer. But that is not the right way to show it. So now I'm going to give this 6,000 because it is not qualifying for BADR. If you showed that way, it is inappropriate. But your answer is going to be the same. You got what I'm trying to say? So how much is the taxable gains now? How much is it? 300 and 7,300. So now how this 7,300 is taxed is the next question. So this entire 7,300 will be taxed at 18%, correct? Why 18%? The gains is, eaten by the losses. And then our liability will be reduced at 18% to be charged because of the gains is only from what? Residential property. That's what I'm charging at 18%. Residential property, it needs to be go at 18% and 28%. So this will be 1,000 something. How much? 70 to 10. If it is, that depends on the total income as well. So in this case, your income is lower, right? The gains are lower. Yeah, no, since not the threshold. You need to say, yeah. Coming back, there is 33,700 and then higher rates bands there, right? But in this case, when you take the previous case, you need to determine the gains that you are taking is going to qualify for at the lower rate. That don't different compare those two. That depends on whether you're going to charge at lower rate or higher rate. When you have BADR, business asset disposal. So if it is qualifying, it goes with the lower rate. If does not qualifies, it goes with the higher rate. That is the position there. In this instance, you need to take the net effect. So then you will be falling back to that 37,700 thing. Okay. So your income is lower. So when your income is lower, it is going to be charged at 18%. So this percentage will be given to you at the exams or not? Will be given. Yeah, let me show the fact sheet. Yes. If it is, even if it is, if it qualifies, it's going to be charged at 10%, whatever the income. Whatever the income, it's going to be charged at 10%. No? Doesn't have a limit. So let me show that. See, when it comes to property, normal, when it comes to capital gain taxes, the normal rate is how much? 10%. Are they giving, I mean, the sanctions like this? Where is the 37? Are they giving income limits? Where's the income limits? See, there is no any income limits like this here. So here they are, now don't confuse with income tax and capital gain tax. That is separate. Income tax, you have these bands, the income limits. But when it comes to capital gain taxes, it is about the choice. So if you want to charge at lower rate, so it needs to be at 10%. Residential properties lower rate is 18%. If it is higher rate, it is going to be 20% and 28%. So these are the things that you will get along with the annual exempt amount of 6,000. So then this is BADR. That's what I'm going to say. Business asset disposal relief. Up until 1 million pounds you can claim. So that will be charged at 10% up until 1 million. If your asset is qualifying for business asset disposal relief, you need to be paid 10% till your gains are reaching 1 million pounds. You got it? Till your gains are reaching what? 1 million pounds. Prashant, you had a question. You had a question? You lost your question. Which one? Now the problem is you all have confused all the rates together. The CGT, the income tax rates, net asset disposal rates. Cool, it happens. That's the reason why they're giving you fact sheet. Okay. So always use the fact sheet if you're confused. You wanted to ask me something. Now, we need to understand the methodology, how it is being used. Okay, we'll come to the residential part. We'll come to capital gain tax part. How things are being solved after this discussion. Okay, after this discussion is the question. So this part of the question is done. We discussed all the answers. Why am I taking 7,300 at the lower rate? Now that was the question to you. Okay. You have the rates in study out. Supposed to act plan. Let me show you. I wanted to show you. What was your question? I forgot your question. Mhm. Yeah. All right. Okay. You're asking me how to decide the bands. Why did I take it as percentage? How am I deciding the percentage on the level of income? Is that your question? That depends on the bands, income bands. Basic rates means lower, higher rates means higher. Higher and additional rate, it's higher. Is that the question? Sure. Okay. So here also they say it's the same thing. If it's amount within income tax band, you will be paying at 18%. Okay. If it is beyond, you'll be paying at what? Since it's a residential properties income, it tariff 35. Yeah. No, we took 18%. I took 28%. Let me check. If I took 28%, then I'm wrong. No, if I took 28% in this question, you're talking about this question, no? Then I was wrong. Oh, what's the wage? I think I took 18. No, that's why I said that is qualifying for BADR. No. When things are qualifying for BADR, it's at lower rate. The other thing is not qualifying for BADR. That residential properties income, that's not qualifying, yes.
But because
Now, when you are disposing, we need to see two things, no? Whether you're qualifying for reliefs or not. At that position, when you're comparing, you're not taking the bands there. Of course, it's going to be charged at higher bands because you're making more gains. You have to put total gains is how much? Listen. Okay. Now I understood your question. You're telling that 35,500 and the other gains. What's the total income? It is 60,000. So the qualifier is already at additional tax rate. Sorry, higher tax rate payer. Is already a higher tax rate payer. But his 35,500 is qualifying for 10% because he receives business asset disposal relief on unquoted shares up to 1 million. The rest of his income needs to be taxed at higher rates. But you're asking, since the total is above the higher rate, that's how you need to decide that. 7,300, since you're making a loss, your income is going below the, you're not going to be a higher rate tax band payer, you're falling into a lower tax rate band payer. So it decides upon the position. Net gains. Then only you need to see AE. So what was reliefs? And then if I have calculated it as 28%, then my answer is wrong. I hope I did. 18% because that's the lowest rate. If it is not residential property, I should take 10%. Because only residential properties lower rate tax band is 18 and 10. Is it confusing? Or did I confuse? Okay. So what was the page number? 60? Oh, I hate this. Are you finished? One? Fine. Yeah. No, I'm just checking my answers. Now you say in person. Section A, now section A is different. This part, section A, I'm choosing because of this 14,185 up to that now 41,500. 6,000 is gone means 35,500. And they are telling that at the point of disposal, Ruby had not made any other disposals, expected to have a remaining basic rate band. So the remaining basic rate band is 14,185. So no, the total capital gains is 35,500. Of that, 14,185 will be qualifying for at basic rate. So which is 18% since it's a residential property. Then rest at 28%. Okay, fine. But these things are not interrelated to each other. We are just picking up now. Now they are telling that what if the scenario, now they're asking capital gain tax payable or repayable for the tax year 23-24 during March 2024. She also disposes either 1 or 2 as the option. So this is what you need to understand from the requirement. It's not the mistake of you, it's mistake of the requirement, isn't it? Is that the blame you need to put? No. Fine. So now they are telling that shareholdings, now it is uncoded. So uncoded shares will be qualifying for BADR, business asset disposal rate. So that will be claiming at 10%. Why 10%? Because it's a qualifying asset. But the gains, now that position you need to understand what sort of a taxpayer he is. So he is falling into a high tax rate payer. So he needs to pay at 28%. Okay. Then the next question, that is a quoted trading. It does not qualify for business asset disposal relief. You need to understand how much gains he is making because they didn't give the gains because she is getting the shares as a gift, isn't it? So the sales proceed is this much. How much it would have costed? So the question is how much it would have costed. Did she pay anything on this? No, it's a gift, right? It's a free shares. So actually she is not losing anything. She's actually receiving money. But in terms of tax calculation, you can determine the cost. So you are selling it for 59,200 because your share prices is going down. So you are making a capital loss of some X amount. Also, parallelly, you have a property by selling that you're making a gain of average. So you can, when you are disposing, because you can't carry forward or carry back your losses, no? Even capital gain tax, you can carry forward and carry back losses. So in this situation, once you sold this property, you need to claim that losses at that point. So you are claiming the loss. Indexation allowance is for what? For what we give indexation allowance? For companies. This is individuals. An individual is buying shares. That is not company. This is individual tax returns. So we did that classification. Indexation allowance is only available for whom? Company when they sell their capital, not shares. When they are capital assets. So they don't get AEA. Instead of AEA, they will get IA. So don't confuse that now. Okay. Now, fair. It's okay. You can get confused because here I'm talking about shares. So your mindset can be thinking from company's point of view, not companies. You're talking whose position? Ruby's position. Who is Ruby? He is an individual. Ruby's not private limited. Or it's not Ruby's PLC. I'm not talking about Ruby's PLC. I'm talking about Ruby's position. So it is income tax. Good that you asked. So you don't now, even if you're confused in the exam, see the title. The title is company means you need to calculate IA, not this. You know how to index. $1 million for, yeah, still it is for qualifying business assets. Cool. Fine. Can you remember I asked you something else to do? To study all the capital gain tax part once and draw your summaries and keep it separate. Why did I say that? To keep it separate? Because I know that you will get confused at this point. If you had that, that will be supporting for you, because you can't be remembering everything. Only once you come across these situations, you need to recall those. You got it? Fine. It's all good. No worries up to this point. So the second question is done. What was the third question? Devinka, is it yours? So A, B, this is for Polo. Then C, Apollo. C means yeah, you need to show the value because that is the requirement, no? It's a tax liability. Gains, no? Gains means liability. You need to pay this. Section? Yeah. You can use this point. 8521, which you have already paid on this. So this will be a repayable now. Which means you need to claim. It's not a liability. Yeah, 7,300 into 18% is how much? Tell me that. 1,340. So this is the amount you need to pay, no? So you have already paid 8521. So which means repayable is how much? How much? 7207. So actually, guys, listen. If we, I'll come. I got 8521 from the section A. If I had only sold the gain, if I had only sold the property, I had to pay 8521. Okay, I'll explain everything. I'll start from the beginning. Forget all the understandings you have. So the problem is the way the question is being asked. That's the problem. It's not about the calculations and things. Section 1, it is a separate situation. Though I say it's a separate situation, some informations are relevant for me to compare in the part 2. So at that position, they're telling that you are disposing. Of course, if to make a capital gain, you need to dispose. No? When you are disposing at the section A, you had a property gain of 41,500. Okay. And they are telling that your leftover basic rate tax band is around 14,185. So that is the only position that they are giving. So for capital gain taxes, for residential property, you can get your annual exempt amount. If this is the situation to the company, they will be end up paying a tax liability of 8,521. Okay, fine. Now, in the next situation, it is payable. I didn't say it is paid. You need to pay within 20 days. Sorry, not 20, 60 days. 60 days. Right? No, I'll come to that point now. So if this should be the situation A, no? Did you understand the situation A? Now in the situation B, he is thinking what would be the most ideal option? Selling the shares at Apollo or selling the shares at Polo? 2 days. So now we understood that if you are selling the shares at Polo, the Polo's shares are bought from an uncoded trading company. So if it is an uncoded trading company, those shares, whatever you have bought, will be subjected to business asset disposal relief. Okay. So then along with that, you are having a not qualifying business asset disposal relief of 41,500. Now I'll explain it to you clearly. So you know that 37,300 should attract an income of how much? Attract a percentage of 10%. Why? It is going at the lower rate. As a result of it's getting the relief, those gains. So the other gains will be charged at 9,000, 28%. I explained to you that part. Okay. So now what happens? You are technically, you need to pay 13,670. But already you have paid to the tax authority. And we are estimating the situation. Okay. It's an estimation, not actually happening, estimation. Already you are thinking that you would have paid 8,521 of this income. You would have reported to the tax authority. So when you are reporting it back, you don't want to pay. If you're paying 13,670, it's a duplication. You got it? So I'm saying that out of this 13,670, I have paid this much. So this is the only amount I need to pay back. If you are disposing the shares of Polo, then the next situation is that if I'm disposing the shares of Apollo, then it is not going to qualify for business asset disposal relief. Okay, because you bought it from a trading company, quoted trading company. So these shares, you got it free. It's costed you around 87. It would have costed you around 87 based on the average prices you took of the shares. So you are making a loss of around 28,000. So this 28,000 losses can be set off with the gains. Same year, losses can be set off with the gains of 41,500 of residential property. So technically, you are having a net gain of 13,300. This 13,300 is falling between 14,485, right? The basic rate tax band remaining, if you want to relate it. So, and you are getting an annual exempt amount 6,000. So still it is categorized at lower rate. Okay. So of this 7,300 only you need to pay if you are choosing to sell Apollo's shares. Because since you are selling the Apollo shares, you are making a loss. So if they are asking what would be the most ideal way to sell and pay taxes for CGT, I would choose using Apollo. But that is not the question. They're asking what if situations. So that's all you need to show them. So that's why we need to calculate and see if this happens, this is the answer. If this would have happened, this needs to be the answer. That's all. Here you are not going to give conclusions, judgments. Is it asked? No, unnecessary. You got it? Right. What was the next question? After capital gain tax, is it IST? Who did the next question? You did. You did IST. Question number? Marcus. Question number Marcus. Right. Felicia done. Jack is done. Ruby we did.
Page number 1.
Okay, Marcus, page number 133. Okay, everyone go to page number 133. Can I search? Where is the search? I need to search the search.
That's fine.
Which one? Magnify. You see that?
Yes. Okay.
Right corner, left corner?
Let's go. Right.
Ah, right, I saw. Okay, I search the search. Sorry. Oh, wow. It gives you the options. No, it's still again the Marcus is here also. Ah, yeah, it's taking.
That's fine. Okay.
Clicking, not working. All right, okay. So many markers are here. Ah, fine. This is all good, no? Okay, what happened? All right. Learning the systems. So inheritance tax. First, we'll go part by part. How many parts are there? Only two parts. Two parts. Where did you get the third part? What happened to you? After lunch? Okay. So others didn't look at this answer. Sorry, question. So I'll give others to read this and to quickly think what should they have been the answer. Okay, I'll ask you a question till others think. How was your first part? Was it challenging? Second part was challenging. Then others. Inheritance tax, you got so much of that small gift allowance, that those things you need to remember. And so don't go with that mindset. Technically, my assumption, okay, should be relatively straightforward question. Relatively. Why do I say? Because there's a change in the ACCA for the next year. So even examiner would try to get you through. Not massive changes. This year it's lesser changes. Changes are computed. I just went through. So personal allowance is the same. Then they have changed the taper allowance. It was 240 for you all. For them it is 260. So small changes. Taper allowance for married couples. Oh my God. But
Inheritance, no, it's pursued. Go for the second income tax.
chapter 2, income tax. Taper word they have used onto different sections. Don't memorize that in that way. Okay. The word tapering means what? Restricting. You got it? Oh my God. 240. What was that one? When you are income, you are having annual allowance, right? Of pensions. Okay. So when you are having that annual allowance, when your income is exceeding certain point. So from 240 onwards until 312, you will have a restricted annual allowance was 40,000. You got it. Annual allowance was 40,000. So that will be shrink to 4,000. When it was reaching the income of 312, from there onwards, it's going to be 4,000 itself. You want me to explain that part again? I'll come back with the question for that. Of course, yes.
Example, it's £2,000 to personal pension scheme to increase the resident tax paid than by 2,000.
Yes.
But for profits, that's taxable income, we don't reduce it, right?
We don't reduce it.
For occupation, we reduce it.
We reduce it because it's already being paid through your occupation. That's correct understanding. Understanding is correct. Right. Now, what's the next question? Marcus. Question number 220, no? So when it comes to Marcus, the scenario leads to two requirements. Inheritance tax legislation does not actually contain a definition who is not a chargeable person. Fine. Requirements. Explain whether or not a married couple is treated as a chargeable person for inheritance tax purposes. Ishak, what's your answer? Oh, we are seeing who is Ishak. Now I'll ask Dhanush. You know Dhanush, the famous actor, isn't it? Yeah. Yeah. Yeah for what? Yeah for what? No for what? Married couple. So,
Translated from one spouse to spouse, it's exempted.
Okay. What? What do you mean by interspouse?
Divided spouse.
Between. Okay. Will it be changed for June exams? No, it won't be changed. But June exams, new rates, huh? New rates means changes are coming. So Financial Act number 24-25, not 23-24. Okay. Are you? But are you? No, it's not hard. It's not hard. Not understanding is the same. Little bit changes are there in numbers. A number of the elements that you need to remember. Fine. I'll give you one last chance. I need to answer. I need to understand why. Explain whether because we need to explain the exam. Now I feel like you guys are coming for the revision class to learn things. Not learn, study. It's the first time you are studying, no? Fine. Then states the special inheritance tax measures which are applicable to married couples. So there itself, you need to understand what is the answer after reading the second part. Fine. Take down this answer for the first part. Roshani, correct me if I'm wrong. A married couple, so you can say within brackets, the registered and civil partners. Okay, you know who has civil partners, no? You know? So who has civil partners? So Ramal, you have a civil partner? Are living together. Okay, fine. So in foreign countries, this is common, right? You don't go for a marriage agreement, but you still live together. So the law is same for them. Is not a chargeable person for IHT. Is not a chargeable person for IHT. You know why? You know why? Because, take it down. Because yeah, I'll explain this. Okay. Because each spouse is taxed separately. Each spouse is taxed right. Separate. So when it comes, that's what I wanted to bring that next point. Very good, Roshan. So now read the requirement of the question. Explain whether or not a married couple is treated as a chargeable person for inheritance tax purposes. Most of the students went wrong in this question. It was an easy question. The question is, do you submit your returns together or not? Do you submit your returns together? No. Whatever the returns, it can be even for income tax purposes. You separately, your wife separately. You got it? Inheritance tax purposes. Your inheritance tax return separately, your spouse inheritance tax separately. So a married couple is not a chargeable what? Person. Did you understand that? Did I mean correct to you? Do you understand that? Okay, fine. Now, the second question State the special inheritance tax measures which are married to the married couples. So there you can say the gift among spouses are exempt for IHT purposes. The gift among spouses are exempt for IHT purposes. That applies for lifetime gifts and the transfers on death. Transfers made on death. And also, I will give another point. It's also good to note. Take it down. So when it comes to inheritance tax purposes, among spouses, now let's assume whatever the property that I transfer to my wife is not going to be taxed. Normally transfer to your wife. You got it? Because whatever you transfer on death, so that property, that gift is not going to be taxed, even if the lifetime gifts. So always give it to your wife. Okay, fine. Next, if my wife is watching this recording, she will be happy, no? But I would say if I'm living in UK. Okay, fine. Next. It's both same much. Same. I'm saying. So now let's assume wife is dying before husband, means if she's having the property, if she is transferring to the spouse. That's why we are using the word spouse. Okay, I didn't say husband and wife. Partner. Fine. Happy? Am I happy? Okay, fine. So now take down this. Any unused normal nil rate bands and residence nil rate bands, normal nil rate bands and the residence nil rate band, any unused normal nil rate band, any unused normal nil rate band and unused residence nil rate band on a person's death can be transferred. On a person's death can be transferred. I didn't get you. No, if it is not died means they don't. That's why I said on death. So fine. But the previous gifts means both lifetime and on death. Okay. Now the next one. Calculate the inheritance tax which will be payable on Marcus' death. You should ignore IHT annual exemption. So ignore annual exemption. How much is the annual exemption? 3,000 each year. But here they are asking us to ignore it. So now don't go and calculate annual exemptions. The last year he haven't claimed any annual exemptions. 3,000 every year you don't claim it. So they are instructing us not to do it. So if you are being instructed not to do it, then don't go and do it. However, let's read the question. So now when it comes to inheritance tax, you need to keep mind of dates to calculate what? That 7-year thing. Because you will be, if the person dies within that 7 year, then only the lifetime taxes needs to be paid. Passing 7 years, glad. So ask them to hold their breath. Got it? Fine. So Marcus died on 30th September 2023. So when he is passed away, so he passed away on 30th September 2000, sorry, 30th December, my bad. 31st December 2023. Poor fellow. Okay. So he made the following gifts during his lifetime. So when he was living, when he was live, so he has given the following things. On 14th January 2012, how long back? More than 10 years, right? Marcus made a chargeable lifetime transfer of 315 pounds to a trust. So either you can transfer it to a person or you can transfer it to a trust. So he is making this to a trust. So the trust ones, you call it as CLT. Is that? So that's how much? 315 pounds. So is it more than 7 years? This is more than 7 years. I'm just noting things, okay? I'm not writing anything. I'm just more than 7 years. Let's make the decisions later. Fine. Yes, he's died now in this situation. If he's died, only the personal individuals transfers become taxable. Lifetime transfers to trust will be taxed at the lifetime itself. Fine. So on 33rd December 2018, falling within 7 years or after? Within 7 years. Because it is around 2016 itself. It will be starting from that 7-year period time. So Marcus made a chargeable lifetime transfer of 395 pounds. How much is making? 395 pounds to another trust. It is also a CLT. Chargeable lifetime transfer. So how much is that? 395. In addition to the gift, Marcus paid a related lifetime inheritance tax of 96,250. So on this, he has paid a tax as well. It's a good point to start up with, but I'll just keep it going. Then, on 1st of January 2019, now Marcus made a gift as PET. What is PET? Potentially exempt transfers. This becomes liable only if he dies. Of 30,000 pounds, sorry, 30,000 worth of shares to Scarum Limited, an uncoded investment company, to his daughter. So this is an individual gift. The gift to an individual. So this is a PET. This is a CLT. So before the transfer, Marcus owned all of the shares at 100,000 of ordinary shares. Which company? Scarum's company. But on 1st of January, Scarum Companies Limited shares were worth £5 each for a 30% holding. For 30% holding is $5. Then 70% is £9. 12 pounds for 100%. Let's see. The nil rate ban for the tax year 2012 and 12 is £325,000. Then, and for the tax year 2018-19, it should be 325 yet again. Under the terms of his will, Marcus left his entire estate to his wife. His rest of the belongings to his wife. Calculate the inheritance tax. So I'll explain while I'm calculating this. You understood the position, right? So these are the positions. Correct me if I'm going anywhere wrong. So when I'm trying to calculate the inheritance tax, so I would say the IHT inheritance tax on CLTs and PETs. What is CLTs? Chargeable lifetime transfers and potentially exempt transfers on Marcus' death. Okay. So now, how am I going to read this situation? First of all, I would say the CLT, which was happened on 14th January 2012. I would say on 14th January 2012, you are having a chargeable a CLT, a transfer to a trust worth of how much? 315 pounds. Okay. This is more than 7 years. This is more than 7 years. So I'm not going to carry forward or carry back this one. Did you understand that? So I'm mentioning that this is going to be more than 7 years. No IST is liable on that figure. However, during my next transaction, there is another CLT that is happening during 2018 December. Yeah. There's no, because the itself given because it's more than 7 years. So if it is anything more than 7 years, inheritance tax is not liable. That's the ultimate understanding. Now I'm coming back to the other situation. Now, yes. No, that's what I'm saying. We don't want to do that because it is past 7 years. If it is passing 7 years, we don't want to do that. Okay, fine. So now, the second thing, the second gift that you are giving a CLT and a PET, no. So there is a chargeable lifetime transfer as well as a potential exempt transfer in our question. So the first point, the transfer of value. On CLT, it was 395, which is made on the gift. Gift to whom? Gift to another trust. So CLT means you're giving gift to trusts. Okay, right. That is how much? 395 pounds. So on this 395 pounds, you have already paid a tax of how much? So who has paid during the lifetime of Marcus? He had paid an income a tax of 96,250. So of this 96,250 worth of tax is already paid. So which means how much is remaining? Sorry, you should not deduct it. You should add it. Tax paid by Marcus. I'll tell when to do that. So if tax has been paid by the person, so who is this person? The person who is transferring. So if he has paid a tax of 96,250, so this needs to be topped up. So what is the amount here? 491,250. I'll tell you. Because who is going to pay inheritance tax now? Marcus is already dead. inheritance tax is calculated on the transfer value. Correct. Who is going to pay this tax? The existing party. It can be the trust or it can be the whom. Whom. It can be the civil, it can be an individual, trust or an individual. That is what you need to understand there. Okay. Coming back. Now, the next thing is you need to determine annual transfer amount. Okay. So your annual transfer amount is not eaten the previous 7 years because this 315 is expired now. So which means still you have that fresh transfer amount, gross chargeable transfers. So that is how much? That is going to be 325 pounds. That is given. That is 325 pounds. Yeah. However, from this date, 2018 to 2012. So this transfer is happening in 2018. So 2018 to 2012, is it 7 years, falls between 7 years or not? It is falling between 7 years. So which means since it is falling between 7 years, you need to reduce how much you are going to get from that particular period. So of that particular period, you have used 315,000 already out of 325,000 pounds. So which means I can claim only 10,000. Hmm? No, you need to go back by the dates. Because that is the only available allowance still available for them. And that's the only available allowance for the CLT. Yeah, every 7 years. No. No. It's not goes out as well. But tax year 2012 is also 325. And tax year 2018-19 is also 325. So they have given for us, the band is still the same. So now you have chargeable transfers of 325. Okay. So what is that gross chargeable transfers? That is the amount that needs to be transferred annually. That's the allowance you are getting. Of that, 315 is already utilized between 7 years because this is happening in 2018. So 2018 and 7 years back will be 2011. But this is happening in 2012. So you have eaten up some of your allowance in the last 7 years. Okay. So that is how you need to calculate it. It is not isolated. I get you.
Outside 7 years, right?
No, 2012 is not outside 7 years. It is becoming outside 7 years when you compare from 23. But the second transfer is falling in 2018. From that position, from that date, it is falling within 7 years. You got what I'm trying to say? No. It not the end of the tax year. You need to check it from the date that you are transferring. Are you asking me end of the tax year of the previous allowances? Yes, that is current tax year. No, don't judge it from there. It needs to be CLTs needs to be chargeable lifetime transfer, right? From the date it was transferred. The date. That's what I'm taking 2018 here. Okay. Why you are not? No, you have made a transfer of 315 there. Okay. After 315, you don't want to pay taxes because it is covering from your annual allowance. And there is a balance that you need to show if you make a transfer. So now in 2018, you're making a transfer. You had 325 allowance. Of that, you have taken up 350. So nothing to be paid. No chargeable life taxes there. So in this point, you have another 10,000 only remaining to claim. Only another 10,000 is remaining to claim. So that this will become what? You will be having a balance of 481,250 to be taxed of the gift that you have. Okay, fine. Then the next thing that you need to understand. Okay. So Marcus is paying this inheritance tax that you need to add up because Marcus is paying in it. Okay, now he is making a PET. So this PET is important. So that will be calculated. You need to see how much is the transfer of value of this final gift that he has been paying. Okay, for that you need to do what? The transfer of value that you are making during his death for shares. So you are transferring some of your shares to your daughter. So to your daughter, you're transferring some of the shares. So which means, so value of the share is important. So value of the shares before the transfer, I would say before, is how much? That is going to be, if it is 100% of the share, then it needs to be at 12 pounds. So 100% of the share, it needs to be at 12 pounds. So Marcus was holding entire 100,000 or 100% of the share. So which means Marcus is having 100,000 worth of shares. Per share, the market value is 12 now. So that will be 1.2 million, correct? That is going to be 1.2 million. Now you need to understand value of the shares. Value of the shares after the transfer. So how many shares he's transferring to the daughter? 30,000. So value of the shares remaining with him is 70,000. So if it is 70,000, what is the price? After, for 70,000, the price will be, for 70% holding, the price will be 9 pounds. So if you are holding at 70%, the price is at 9 pounds per share. So 9 into 7 is how much? 63. Yeah, 9 into 7 is 63. It will be 630,000. So now you will understand what is the transfer value. Huh? Yeah, so I'm taking the value of the shares after the transfer. After the transfer, so he is having 70,000 worth of shares. So now I will get is what is the transfer value? Because the values are changing. If it is 30%, different. If it is 70%, it's different. If it is 100%, it's different. So if it is 100%, the value of the shares is 1.2 million. So then the difference between 100,000 and 70,000 is 30,000. That is the value I need to find. So that's going to be how much? 570,000. So there is an annual exempt. The transfer of value for potential exempt is 570,000. Okay, that's going to be how much? 570,000. So now you need to find the taxable amounts. So this needs to be 570,000 itself on the potential exempt transfers. So this will be liable for IST purposes. So inheritance tax needs to be paid due on death, or inheritance tax that due on death is going to be 40%. So what is that 40% of this and of this? 40%. After calculating 40%, the next point is you need to look for taper reliefs for both. Taper reliefs that they will give you, okay? 5 to 6 years means how much? And 2 to 3 years means how much? We'll go for the taper relief after this, okay? So first you need to calculate this. These are the steps, okay? Well, so what is 40% of this 481, 250? How much is that? 192, 500, and for 570, 200, 220, 57 into 2. No. You will be entitled for taper relief. You will be entitled for taper relief. So let's see how we are going to get entitled for taper relief. So how much is this? 325. No, I'm asking 40% of 570. 228,000. So now what you need to do? The next step is determining your taper reliefs. Yeah. No, better to calculate separately because each and everything is taken in a different period. So I would say the taper relief up until 3rd of when is it? 3rd of December 2018. 3rd of December 2018. So that needs to be from that date to which date? 31st December 2023. 2023 is how many years? It is falling between 5 to 6 years. If it is falling between 5 to 6 years, what's the percentage? That will be given in the exam and it's in the fact sheet because I can't go back. 60%. So 192, 500, 60% is how much? How much is that? 115, 500. So by this amount, this will get reduced. CLT. These all are CLTs. And also for CLT, you had inheritance tax paid by Marcus. Isn't it? That was how much? 96,250. Yeah, 96,250. That can be also reduced. So I would say inheritance tax payable on death is it going to be nil because 96, 90 is more than this. Okay. So on CLTs, on death, you don't want to pay anything. However, on your PET, so PET is happening on when? 1st of January 2019 So that is happening on 1st of January 2019, and you need to take the period for 31st December 2023. So that falls between how many years? That is your PET. I'm taking on the PET. So that is how much? 4 to 5 years. So 4 to 5 years means what is the percentage? 40%. So 40% of this 228 is how much? 228 is 40%. 228 is 40% is how much? How much? 91,200. So now the inheritance tax that you need to pay from 228 minus 91,200, this will be 806. 826. How much? 9 into 7. 3. 136,800. Correct? You got how much? No, you need to take it separately. CLT is separately, PET is separately. See? Yeah. Then you will get a negative answer. From 190 to 500 minus 115, 500. Because that is a taper relief. No? So if you are dying within that period, you'll be getting a taper relief on the death. It will be repayable by the HMRC. Very good. So that is the amount that will be tapered. Okay. 0. So only payable. No? Even if it's not payable, it's going to be 0 because you are getting more. Okay. So nothing is payable. So only on PET we are liable to pay. And also in this case, why didn't I take the AEA? When I say not AEA, the annual exempt amount, the annual transfers, they asked not to take in this question. Otherwise, I will be getting 3,000 each and every year. You got it? That is another allowance, another exemption. In your exam, you might be getting, the examiner might ask you to include that as well. So what you can do is, now I did markers. No? So once you go home, you can do the other question, other IST questions. IST questions are easy. Always try to match your dates. You need to identify what is a CLT, what is a PET. A CLT means chargeable life transfer. If I am giving a gift to a trust, to a third party. If I am giving any gifts to individuals, it is, if I am giving to any things to individuals, it is a TET, potential exempt transfer. So now, when are you liable for inheritance tax? Is the next question. CLTs during the lifetime. PETs after death. It becomes liable after death. And also, you should know there are many exemptions. Now, in this question also, the balance of the estate, that 70% of the shares is transferred to his wife. So will it be taxed? It won't be taxed. Because 70% of Marcus shares, he's telling after his death. Now see, the last point, under the terms of his will, Marcus left his entire estate to his wife. So entire estate will be belonging to wife. That is exempted for which purpose? IST purpose. Yeah, they didn't give the estate amount, but still I'm saying that. Because how can I'm getting 70%? Because 30% you are giving to the daughter. So remaining is 70% on the shares. I'm talking about the shares. Estate means whatever his belongings, property. Okay. To his, all the property. Trust is different. But this is a PET, no. But this PET is exempted to the wife. That PET is exempted because any transfers between the spouse is exempted. Any transfers between the spouse is exempted. You can include that also into your answer. It's not wrong. But make sure inheritance tax annual exemption is also utilized in this question. They're asking us to ignore. So since we are ignoring it, I'm not using it. That's what I'm making these disclaimers when you make your choices to your other answers. Right. So we discussed an IHT today. Paper is available when he dies within 7 years. First year is also not available. It is starting from second and third. So let me. Yes, it starts from third to fourth year. Not even if no after death, if the transfer has been between 2 to 3 years means no taper allowance, zero. It starts from 3 years but less than 4 years. You got it? So this is the taper reductions percentage. What are those penalties if you don't pay within time? What? Income tax,
There's incorrect.
this, yeah, incorrect submissions and all those things, administration part. It will come under VAT administration, it will come under corporate tax administration, it will come under income tax administration. Make sure you go through it. It was a question in December paper. September paper, not December, it was in the September paper. A or B, yeah. They can still test in C also. They can still test in C. Okay, fine. I'm giving you a break to be back in 20 minutes. Okay. And what's the next question we need to discuss? Back, no? Your question. So once we're back, we'll discuss the back.
I tried the SIMA, ACCA, case studies, but doesn't work. No, I got exemption for my NEET. I think it's the accounting. NSPM. Accounting and maths. Like you can. So you got yes, I think that's fine. I think because these are for 3 subjects, 1 case then. All such 3 subjects HR and those management theories, the subject. Management. There's a 22 pages case that you have to read there and write some info facts. And then there are 4 25 minutes. 4 25 minutes. Okay. No. 45 minutes per question, only 4 questions. Okay. If you do that, yes. You need to get 60 for basically 67 marks. 50. So like that sense, if you complete that paper, you are done with the third, yes. So like 1 paper, 4 questions. Only 1 paper. But the problem is the time management. They are expecting too many things from that 45 minutes. So you have. How much did you pay? Post fees 60,000 or something. How much did you go? I tried once. I got 35 marks or 40 marks. Then I understand that's not going to work too. So that is starting still. This that's it. Now it's in world rate. When I am doing no, there's a trade still. Yeah. Yes, near. Now they have sold the property and moved. That's yes. But things went wrong. After COVID, they moved to online. Even after the COVID, they are doing online. Very hard to. Yes, some noise coming. No, is it from the other I think my I think my fan. He fan. Yes. I did close this. No. Other problem. For safety, I was there. And it's not like this. Even if the camera is also, I am not going to be problem. So I did close it. No, when I join, sometimes old camera get open. Feel very awkward, so inside. You are living like inside. No, you avoid this times there are around 9 times. You don't use the camera. No. Like everything or no back there. And because it at that time, so yes. No,
What was the same, right?
I'm not going to join Zoom or anything from home.
As the Zoom is a
Yes.
Zoom is a hacking one. Same way they did Zoom.
No, when I join those days, sometimes that days, when the lecturer comes, only some old cameras are going to open. So I want to avoid that.
Old camera sense.
Since there are some subjects.
And you should have your camera.
Yes.
And you said you don't have a camera. For that purpose of this, you write the card for the people that like advertise in the world. If this camera is on, all the people that can see what you are.
Yes.
That's the purpose.
Yes.
Then try to close it for lecture purpose.
For lecturers, I think when some settings are not up to marks, they are when logging into the Zoom, sometimes my camera get open.
And it automatically opens. Opens. Like when you go to Zoom, it opens the camera. The camera in the sense, the Zoom, no, Zoom camera or the application.
Zoom camera.
Zoom, I need to go up. Let me see. Let's go check out. Our neck, the neck. Until I check out, you do it.
No, I don't have it.
That's a wireless, no, it's hacking in wireless is different. So like, when you join the Zoom meeting, they ask, on the camera, so even if you off it, there,
In Sima subject, you have to open the camera. Sometimes some subject they allow, but most of the subject you have to open camera. I close the camera and tell them my camera is not working. They allow me.
so you close this for the Sima purpose or you close it for the scan, like, the other
No, Sima purpose.
Sima purpose. Now what do you do?
I even remove them.
But even if you join from a laptop, there is so, details are, and that's done. Like if you join from a time or something, it doesn't have a camera. You show it to the laptop.
They already have a camera. They ask us to open the camera, but I told them that my camera is not working.
And that's it.
They don't know my camera was working or not.
So like, when did it start, Sina?
Last week,
Last year. Why did it take a year to complete this?
lot of my friend told me that basically it's very difficult. When I learn Sima, I get this is easier than that.
No, right, so Sina is like going to there. Like, is your course are there, no? It's you're working.
It's
Working.
no. I'm like my father's having business, so I have to
I am full time. I will go to the and this is
planning to do a job, but
otherwise. So like what do you call it, when you started off, like you thought of doing
no, my those are the extended.
and gender. I said, all together. Even if
I have to do tax.
but if you are going to the degree. But I didn't degree.
I have already have a bit.
No, let's say if you public skills level, you get degree. Another degree. Now you will go on. Then that would be degree. So
I'm not planning to take.
right?
I have already. So I think the said all, if you have one, if you already have a degree, so no need to take.
Yeah, but if you are going for it, you can do it. Because the practice person. So if I solve it,
Yes.
PM, FM, tax and
PM tax and audit.
FM solve it.
Yes.
FM also is it. So very good.
No, sir. Yeah, in our. If they don't pay tax.
So that would be how many years?
So we 3 years.
Around 20.
26.
Right. No, can I?
Okay. Then you go
But I did say, would you understand actually, find interesting or, yeah,
interesting.
just, yeah, run paper.
No,
Not yet.
not yet.
I don't really have this happening this. It's about 9 days, you know, I said that. You know, I said that.
Then fourth.
I said that.
I think the
Process.
that's so
I was,
process.
but there is a, and you will get the data. Is there, no?
Yes.
You know how to get it, sir? I can get class for it, I can class for the charge. Right.
Did you see for last lecture? Last.
Yeah.
Last.
Huh?
Difficult.
No, that time, yeah, it's all difficult, but I'm not actually studying in a proper way. Maybe there was.
How do I download that?
If I download it,
No, that document.
I think it's, you got an email.
Email, yes.
That's it. How is it?
Yeah, what happened?
Maybe.
5G.
Slow.
Now you don't know
Long.
because I have restricted the access.
No.
Oh my gosh.
And some after incident. After class.
After class chill.
It's.
Saturday.
It's
No, next Saturday we are having this same session. We'll have a full day session like this. And I'll put to discuss some MCQs. That will be on a weekday, 7 to 9. I'll put it in the experts group. Okay. Friday, all our staffs are going out. It's Sivaratri day, no? So 26th. So I'm taking all the staffs out. High time. PM staffs. Students, that's what I wanted to take you all in April. I'm planning to organize this Aurudu event for you. I want to take you all to Kandy. Yeah, fun. We'll put a bus from here. So we'll organize the Aurudu event there. And iftar will be organized the next month. So you all can come to that. You'll be obviously invited. The next month, iftar. And I need to have each Pongal, we got messed up. I was out. Then I forgot the date actually, to be honest. May I increase the temperature? Yes, you can do whatever you like. It's all your property. Okay, Garfield. Garfield is next question. So who did that Garfield question? Okay. So how was Garfield? One of my favorite cartoons when I was small. What's that? Yes, you can take it. There's a plug point there. So question number is, what's the page number? Can anyone tell me the page number? What's the question number, guys? 20? 310. Sure it's 310. I see some companies. Amazing. 310. No, it's like the answers to the question. This is the one. No? Okay. It's a good question. Garfield. So what they have asked. So this is in terms of value-added taxes. So calculate the amount of value-added taxes payable. Value-added taxes payable for the Garfield for the quarter ended 31st March and give a brief explanation, making tax digital and state whether it applies to Garfield. Okay. So now you need to determine your VAT. What is VAT? It's value added taxes. So value added taxes means it's charged on your goods and services. This is the only type of indirect services that indirect taxes that you have. So you need to determine how much you collect on your output taxes and how much you collect on your input taxes. So in this question, they're telling that Garfield has been registered for value-added taxes on 1st of April 2017. Garfield makes taxable supplies in excess of the VAT registration threshold each year. So Garfield has previously completed his VAT returns himself. So he's completing his VAT returns himself. But for the quarter ended 31st March 2024, there are some items which he is unsure whether he has treated the correct tax treatment. Then the Garfield partly completed the VAT computation for the quarter ended 31st March 2014. And all completed sections of the computations are correct. Completed ones are correct, but with the omissions marked as outstandings. Right. So they have already prepared their VAT returns. So you have your output, you have your input. So you find what is your VAT payable. So they're telling that unless otherwise stated, all the figures in the notes are exclusive of VAT. Fine. So what you need to do is, now they have given the sales all standard rate they have given, but they have given the discounted sale, equipment sold and full scale rate. So full scale rate is also already calculated, so no issues with that. But the notes what they have given are with issues. The notes what they have given are with issues. So let's take the note 1. So the note 1 is about the discounted sale. So let me go through the discounted sale. Okay. On 1st of February 2020, on 10th of February 2024, a sales invoice of 4,300 was issued by Garfield in respect of a standard rated supply. Okay. So when you are issuing this on 10th of February, to encourage this previously late paying customer to pay promptly, Garfield give a 10% discount for payment within 14 days of the date of the sales invoice. Actually, customer is paying within 14 days. The invoice has not been taken into the account of calculating the output VAT. So the VAT figure of 222,500, and this is only sale for which Garfield has prompt payment discount. So what they are trying to say is there is a prompt payment discount. So that transaction has not been calculated for VAT. So what happens? The total sale of the transaction is 4,300. Of this, 10% is given as the settlement discount. What is the settlement discount? If you are paying within this particular date, you will get a discount. So this customer is getting that discount. So technically of this 4,300 is the 90%, sorry, of 4,300 is the 100% he needs to pay, since he's getting 10% of trade or the trade discount, not trade discount, my bad, settlement discount. So he will pay you only 90%. And they are telling that all are exclusive of VAT. So VAT percentage is 20%. So you need to calculate how much of VAT that you are collecting through this transaction. So you are going to collect through this transaction how much? How much you are collecting? Calculated, please tell me. 774. So this is the amount of VAT that you are collecting on this first one, on the discounted sale. A simple transaction. Now on the equipment. So let's go to the equipment. The second note is about equipment. So during the quarter ended 31st March 2024. Now this is also happening during the quarter. So Garfield acquired some of the new equipment cost for 12,400. And he is a VAT registered supplier, but he's situated in overseas. So if he is a VAT registered supplier, so on this 12,400 and he is situated overseas, I told you two things. First thing, you need to calculate your output VAT and then the input VAT. It's going to be the same. So they are telling that it is exclusive of VAT unless it is mentioned. So exclusive of VAT means you need to charge 20% on this. That's how much? How much is that? 12 into 2 is 2,400, 2,480. 2,480. Now, since he is an overseas supplier, you can claim for output VAT as well as input VAT. I didn't get you. Because you need to show, so when you are importing things, you need to say that the imports are charged for taxes. Okay, so that will motivate the internal the domestic supplies. You got it. But if that needs to be an essential item, so you are telling that when you're trading this, of course, the suppliers can claim that taxable supplies. You don't want to be taxed at 2 points because you need to pay the overseas as well as the local. So as a supplier, you are being taxed at 2 points. So that's the reason why you are paying at 1 point and deducting at 1 point. So technically, okay. Because when I was telling that, you was telling the other way around.
I thought yours.
Yeah.
I thought.
Huh?
Like 5:30.
Yeah.
Recessions, morning, afternoon.
Yeah, morning, afternoon, evening. And Excel exams at night also, 9:30, 8:30. Don't you know that? That's according to UK time.
Six levels.
Yeah, whatever levels, both. UK going plus or minus, no? And for you all minus. What did you say? No. Whatever you book is Sri Lankan time. Everyone have your docket? My God. Balanda SL time kilati. GMT. So they put GMT, no? GMT 9 AM. 9 AM or 13 AM? 9. No matters. Same exam question. But morning guys will not get that's about whatever the question that you get. Afternoon guys won't get. Afternoon guys, whatever the questions they get, evening guys won't get. Because the slots would have been booked. No. That's what I'm saying. With the other exams, it would have been booked. So there can be sometimes sessions or the exam hall. Based on the availability also, it will be locked.
This time there's no Filana.
Hmm?
This time there's no Filana.
I didn't check. I was planning to sit for ATX paper. I told you. But I might do it in June or September. We'll see. Next to UTX. Yeah, I was planning to sit one with you all only. It will be fun. No, I'm trying to develop myself to ATX. It's nice paper. We'll see. For that, I need to plan. So that was 2,480. The same thing under equipment. Here you need to claim for 2,480. This is what I told you. When it comes to imports overseas, you need to calculate output and input. So if you calculate 1%, it's going to be for both output and input the same. So that is happening for the imported items only, okay? That is only for the imported items. Right. Then fuel car, they have calculated. Purchase on all standard rate is okay. Car purchased on 1st of January is 0. That's okay. Impairment losses. Okay. Okay. What is this impairment losses? Devika can keep silence, but others can. What they won't get it. Loss on the assets. Losses. Okay. So why do they have given this? Now think you're calculating value-added taxes. And they are giving some impairment losses. So how it would be chargeable to you? They are not. Now you need to think from that perspective. You need to think from that perspective. Okay. So What? Output VAT. You can claim output VAT on this. How much? And what should be the amount? You are on 31st March 2024. So Garfield wrote 3 impairment losses. So 3 losses, he's writing it off. So these 3 items were purchased in 2023. Okay. So if he's writing off these amounts, can he claim or not? Is my question. Says no. However, good question. Very good question. How do you know which one to claim? There are exempted ones. Taxable items needs to be charged. So in your VAT paper or in your chapter VAT, I told you the items which will generally attract VAT supplies. It's a big chapter. Okay, big chapter in the sense you can't exactly remember what sort of things that you need to tax. But all taxable supplies will be charged for VAT purposes. However, for an instance, let's assume if you are providing some essential services like education, can you charge tax? Can't. That is exempted. Zero rated supply. You got it. So likewise, you would have gone through some essential items. Those essential items are not charged for tax purposes. But all the other assets for which is used for commercial purposes, generally those as now water, general water is not taxed. Bottled water, is it fair to tax? Yes, because you need to pay a money. You got what I'm trying to say? So it depends on items to items. Ordinary food is not taxed. Fast food is taxed. You got what I'm trying to say? So that is how it is technically decided. And see on the VAT chapter yet again, under that chapter, they will be mentioning the items which are generally taxed. Fine. So there's a list of items that you need to know. Here. So this one will come, the impairment losses. So that's what I wanted to say. Now take the date, payment due dates and things like that. So when it comes to impairment losses, the things that you need to think is what we are testing up. So what are the things that you need to think? Ishak. So most experienced person in our class in terms of tax. Online guys, you guys are silent and sleeping. I need your inputs as well. So how to decide what needs to be done? Now, Roshani told that you don't want to include anything. But I need others to say what needs to be done so that I can discuss with others also. Tell me. Come on, what do you think? What do you think? What do you think? No answer? What do you think on the impairment losses? Make a note on impairment losses. It's an important point. Relief for an impairment loss, take it down. Relief for an impairment loss is only available. Relief for the impairment loss is only available. Relief for an impairment loss is only available if the claim is made. If the claim is made more than, that's a rule, more than 6 months, more than 6 months from the time when the payment is due, from the time when the payment is due. Right. Read this again to yourself and now tell me what is the claim I can make and what amount I can claim for taxes. What did I say? Relief for impairment loss can be claimed if it is made more than 6 months from the time the payment due. So what is the payment due on the first transaction? August 23. So what is the invoice date? What is the invoice date? July 23. So invoice date is on 30th July 2023. Then it is due on August 2023. Then the impairment loss is taken on 31st March 2024. Don't confuse with these days. Now, this is the date you're filing your VAT return. So it's the date you're going to do the adjustment. However, now you need to understand between these 2 dates. If it is more than what? Did you understand what I gave you there? I want you to understand that fact. What did I say? Repeat it with me again. Relief for an what? Relief for an impairment loss is what happens. It is available only if what? Claim is made more than 6 months. More than 6 months of what? Payment due date. So what is the situation in this case? Who can find that? Yeah, I'm giving the answer and asking. Online guys, what do you understand by this? That's what I'm asking. Who got that? Why first one? Why more than 6 months? Now, then October, other ones? Very good. How you need to decide? Simple. Your reporting period is when? 31st March 2024. That is your reporting period, which means tax reporting period. In terms of impairment losses, tax authority is allowing you to go back and claim for any items which are more than 6 months. Okay, any claims which is more than 6 months. Now, this is happening on August. From August to March, how many months? 7 months, which is more than 6. October to March, how many months? October, November, December, January, February, March. 6. November, of course, it's going to be 5. So this can be claimed in the next quarter. You got it? This will be also can be claimed in the next quarter. For in this quarter's return, the impairment losses I can gain is only 1,400 into what is this impairment losses? It's a loss to the organization where you have paid when you are purchasing the assets, you have paid output VAT, or you have paid. When I say when you have paid means you have sorry, my bad. When you are purchasing this equipment, you have already paid this output VAT. But of course, this is impaired. The value is going down. So when this value goes down, can you use the same value? When you revalue, you can't use it, the same value. So that whatever the tax you have paid, tax authority says that if it is more than 6 months worth of an impairment review, you can claim the taxes as an input tax. Input tax means you're claiming taxes. You are getting the money back from the HMRC. So on this 20% I can claim because it is excluding VAT. Okay, that's the amount, the total amount of the bill. Of this I can claim 20%. So that will be 280. 40 into 2 is 280, no? 28. So it will be 280. So you can claim only 280 on the impairment losses. You got it? Why you can claim only 280 on the impairment losses? Because the rule is what? Now you can't forget the rule. From your quarter, which means the reporting period, it needs to be more than 6 months behind. More than 6 months, okay? More than 6 months behind means that can be claimed for this quarter. So in your exams, what they can do is they can give you the items, or they can ask you what would be the transaction that is relevant to the future impairment losses. So that will be obviously your option 2 and 3 in this case. Did you understand what is impairment loss now? That is the rule. How did I get 280? 1,400 is your total invoice amount. Your VAT is 20%, right? So 1,000. You don't use the? No, it's just the rule to qualify. That amount is the rule to qualify. Yes, Dhanush. Good pick. Then the next one, entertaining UK customers, overseas customers. So let's see what's happening with the entertaining. During the quarter, Garfield spent £960 on entertaining the overseas customers. The VAT is inclusive. If the VAT is inclusive, what you need to do? 960 is 120%. You need to take what is 20%. Isn't it? Inclusive means that is 120%. So that's how much? That's all you need to do in this question. So you need to first identify whether you are going to claim for taxes or not. So in this question, they didn't ask you to prepare the VAT return. Already the VAT return is prepared. You need to adjust for the figures. Right? How much is that? 16. So you ask me to do now. That's the problem. Yeah, 160. 160. £960 divided by 120 into 20 should be 160. I forgot my maths also. So UK customers, of course, nothing. 0. Overseas customers, I can claim 160. Okay. Then finally, car expenses. You got, yes. Car expense. Car purchased on 1st of January and Garfield used 60% of the business mileage. Okay. For business purpose. During the quarter ended, Garfield spent 1,008 on repairs to the car and 660 on fuel for both business and private mileage. Both these figures are inclusive of VAT. So what are the figures that you can take? Should you apportion between business and private, or you can do both together? Tell me. What needs to be done? I'll give you a small hint of this. We are asking where is the hint? What is the rule behind it? This is not a theory class. I'm asking the questions which we have covered already. Take another note. Take a note. No, then you don't forget it. Now you know things between impairment class. Take another note. The costs related to the car. In this case, it's a car, okay? The cost related to the car can be claimed in full, because there is a scale rate charge added. There's a scale rate charge added to the output VAT, for the private usage. So they have already calculated what needs to be exempted. So if it is recorded under output VAT means you need to pay. You got it? But when you are calculating the car expenses, you got 1,008 plus 660. This is inclusive of figures. So I consider this as 120 into 20%. So now don't go and confuse yourself to differentiate 60% business and 40% private. Because that 40% is separately, they have charged according to the full rate scale. Okay. So get the figures here. How much? 800. 800? How can it be 800? 1,668 divided by 120 multiplied by 20 is how much? 278. No. Get me the 40% of 278. No, I'm just asking. Just 120. 60% of it. Minus that. 167. Okay. That is not tested in your paper. When you update this, there's another part. I was just checking that. Sorry, yeah. So now this is all you need to do. Now you will be arriving at value added tax. At all this, deduct all this, you will be coming at the position whether you need to pay or receive. If it's a positive answer, payable. If it's a negative answer, tax authority needs to pay you. Adjust it. So, Ayoma, sitting for exams. Roshani, sitting. Devinka is sitting. Pawan is sitting. Ishak is sitting. Dhanush, you are sitting for exams. Ilma, if yes means yes. I mean March exam. Natasha, Shenuri. So everyone is sitting. Before you sit for an exam, shall we sit an exam on Saturday? So Saturday, the first half of your session is going to be a mock paper. I appreciate if you can come to the premises. Then only it will be like a session, like an exam environment. Bring your laptop chargers. I will provide you to charging portals. And yeah, if you want water bottles, I will give you that. Okay, high five, Wi-Fi, ඔක්කොම දෙන්න. හරිද? So we'll do a mock paper, a timed one. We'll see how much we score. We'll see who is getting the world prize. Okay? Yes? In the class. Sir, will the syllabus be changed for June? Yes. Yes, June, new act, 2025 acts. Sorry, 24 act. 23-24 act. Now 24-25 act in June. So yes. So last part of the question, give a brief explanation of making tax digital. State whether it applies to Garfield's business. Take it down. At present, no, B part. The answer. Take now. At present, VAT returns are integrated. VAT returns are integrated to the accounting softwares. VAT returns are integrated to the accounting softwares, which enables a taxpayer to submit his returns electronically. And also you can add another sentence to that. This is for your reference I'm giving. Benefits. It saves time. Next point you can say the documented proof can be scanned and attached. The documented proofs can be scanned and attached. And it is visible to the users. And it's visible to the users. And then also you can say the next point. Accounting softwares and remind through pop-out notifications when the VAT falls due. When the VAT falls due. Now, at the moment, you can even file it through paper or electronic. Now, when it comes to VAT, in UK or in the world, Mostly all the businesses are using an accounting software. So this accounting software is developed to interlink with HMRC's regulations. So as and when you are trading, your VAT portions are separately calculated and you prepare your VAT returns separately. So since you are not working, I can't go deep into this. Okay. So for instance, if I pull out an example, there is a cloud accounting system called Xero. So in Xero, you need to understand the configurations, how the codings needs to be done for all the accounts. So when you instruct the system, this is a taxable invoice. If you apply the relevant code, it will automatically prepare your VAT returns. You got it? And later you need to understand what sort of changes and exemptions that you have, because you can't fit all the exemptions to the system. It will just get your instructions, and if you need to change anything, you can change. So forget about this part, that is not going to be examined, but whatever I told you, they can test. It can be a mark or two. Now I didn't answer the second part of this question. Now state whether making tax digital, and that part I gave you as brief explanation, but state whether it applies to Garfield's business. Take it down. Garfield already exceeds the thresholds. However, this is not the case whether he needs to keep all the records digital. Whether he needs to keep all the records digital. Continue the next sentence. VAT returns and payments. VAT returns and payments. Detail. You can continue. VAT returns and what's it? VAT returns and payments. VAT returns and payments are still due to be filed within 1 month and 7 days. Due to be filed within 1 month and 7 days of the end, 1 month and 7 days of the end of the relevant quarter. Of the end of the relevant quarter. So every quarter ends after 1 month and 7 days, it falls due. After, now if it is March, 1 month is when? April. So before April 7th, you need to launch for the March quarter's return. Do you understand that? So that's his due date that you need to supply. Fine. And also, apart from this, so when an amount of your threshold exceeds, you can go on a monthly basis for big businesses. And also you can voluntarily ask to pay on a monthly basis your VAT returns. You got it? So VAT returns, I gave you a format, understanding about the output and input. When it comes to imports, you can claim your output and input at the same time. Okay, fine. So that's about that question. I'll see you on next week, 7 to 9. I'll tell you the date, which date I'm going to meet you, 7 to 9. So there I will be practicing on, I'll tell you, okay. I'll be practicing on questions. It probably would fall on Thursday or Tuesday.
My question.
What is your question?
Operation.
Yeah, I'll take it on that day. Okay. Corporation tax. My question. What's the question I gave it to you? Question number? Question number? This one I discussed income tax. The first one. That's what I'm planning. Monday it is not probable because Monday I have classes till 6-7. I'll try to cancel that class tomorrow. If I'm able to cancel that class, I'll have it for you. Question number? 269. Okay. So 269, remind me to do it. So 690 and 269. You are not lucky, no? Okay. So I'll discuss this lucky. It's good corporation tax. Lucky's case. Everyone practice Lucky's question on that day. And I will be practicing some part two in the section B and section A questions on weekdays. Okay. Next Saturday, I want everyone to come. There will be a mock exam in the morning session. So you can sit for 3 hours and 15 minutes. So for instance, if you start around 9 o'clock, so you can finish the paper by 3:15. Sorry, 12:15, not 3:15, bad. So, and then we take your break, we come and we discuss that paper. Yeah. Which one? Yeah, what to do? No. The guys who are having doubts of those, some questions will come across me. Put it to me a day before that we are having the class. So we can populate those questions and discuss that too with everyone. So you are having a doubt on 125. Question number 125. I didn't get you. Corporation tax also. Yeah, we'll do it on that day. So though I say 7 to 9, if I drag also, not an issue, no? Questions, no? We'll do it together. Okay? Only next week, no man. So we'll study. If I can means why you can't. I say 7 to 9, then only you'll join, no? Fine. So I'll do that question also on that day then. Just send me the link. What are the questions? Not fixed. Oh, okay. Others, yeah, others can leave. I can show it. So I'll see you on Monday or Tuesday or Wednesday or Thursday.
There's only
business.
style.
I will for two.
Second thing, so that is the reason why they take income of certain video. So when the top income against other income, you are taking $50. Okay. Cost is 81,900. So we make even the last restriction. But yeah, the start paying a lot talking incomes. Another income at the same time, the restriction is not like this. Yeah. See, this is important. The last we this taxation talking you get that on the income tax free because the losses to so I'm just trying to say is the value means being in this case, you are making any this year you are making so let's see. Okay, so we take 51. So we are going to take this year. CGT, you need to take it separate. That is starting tax. That is separate. So now, on this 89, 89 something, 81,000, you can delay for this year on this plot. Okay, so this trading income is 21,600, and the interest 52 you are taking. Yes. 2,100 and the person allowance will be restricted to that. We can take today's question, that is disposal time and believe you have to take only of trading purpose. Before that, we do the top income. Is it top income?
Preceding
Preceding top income.
future
trading. You got the notes? You got the notes? The first one I give you. Laptop page. Yeah. Preceding I told you. I will have wanted to take.
You need to take if the business is continuing on the total income. Disposal asset relief එක විතරයි. නෑ ඒක terminal loss. No. Yeah. Terminal loss needs to be trading profits only. Okay. Forget about whatever you know now. Delete everything. When it comes to losses, terminal loss means in future you can't claim no. So when you go backwards, only on trading profits. But trading losses, if it is available, you can carry forward as well as preceding 3 years. That preceding 3 years total income, not the chargeable gains. Chargeable gains is a separate taxation paper. Okay. This one will be coming under for total income. They have also deducted the total income. This question also they have taken total income.
Until 70,000. Why 70,000? That's not it. See, and you take now, if I'm here also, the person I was getting restricted. Here, this is 51,000. I took it 7,000 water because these two totals 24,006.
The other one we want to for
That is third number. So see here, this 27. I took only this 3,700 and this 18,000. This needs to be.
should be on the total.
Now see 4,001. Of this, I deducted only 4,100 for this. This needs to be 4,100. So then only it will become 0. So yeah. But you can do this equation.
We also want to put the column sign, right?
Outside you can put it. You don't want that, no, necessarily.
It's not one.
Here, this is part. No, but you don't want to put, okay, so I want to put. I think this, and then that you see there are 2 zeros here. We want to not to show those 2 zeros. Okay, so then these zeros are take all these cells. If I want to add decimals, do like this. If you want to not to show decimals, do like this. Okay. The exams don't go and practice those in this question. Just type the figure, even if you didn't get the marks, they will give you this.
So even for the work, is different.
Yeah.
You won't have much. So we place lines so that we can right, right.
Yeah, got it.
So that means for this is actually
It's a normal test question.
So
So it is like
so this is restricted, right?
yeah. That restricted part I understand. If you want some parts that you can also.
It's not right.
For the same question, how do we define it? I'll explain it. Just 100,000. I think it's 2,000 price of share. So after 100,000.
Not that much. It's very much.
Plan to build.
Other than
Yeah, submission. So for this amount, your
All the banks.
yeah, all the banks, not only in basic rate, this rate also be this. Yeah,
So this step done to here,
yeah, it's this
uh,
8744.
that we so what does 100,000, right?
Yes, running four process. Because sometimes they don't ask me to know this. That's good. That's the question. 10. This roughly the solutions. 125, 10. How can they take? No, though you want 25 and 75, they have not informed that you are only 25 and when you submit the tax return. So now you are taking 50. That's the normal. It's no election. If the election has been made, you need to take 25. Because the HMRC does not know how much you want, how you want. So they will go to the common judge. The common judge is 50. We probably not use it. Or in rate time. Of sponsor for the stuff.
So this is the essential for the two of the part like spouses for the class. When I like you know unnecessarily each like so both of these one actually
Once you try because and with the answer. So Yes, immediately, no. Why they don't take
Because they, how only a man.
it? Why make it the between share, which is when you say capital class.
Shares.
Shares. How much is your anyway we can't pay? We have made. Because shares you can't pay daily, on the because I think that's a part of it. We qualify for. Because the business at this school, if it's qualified, so you will be charged at lower percentage, not the other. It's a little bit complicated. You can transfer the unused in-rate balance to the spouse. The discussion is given unused in-rate balance to this. So you have used 20% of it. That's 300,000, 20% you have used, 60,000. So balance is 8,000. Yeah. When it comes to benefits, we have to manage Yeah. What's that? It's 60%. Then we change. Yeah.
I work in that's one.
I love to read this. Thank you. That's good. So, and one way like audio is fun. I mean, send it to me. Get back to you on that. Stay down. Yeah. Thank you. I'll do that. You're special. Again, if you said it, against understanding. Yeah. Send me those questions. Detail is what we need. And we will order some of the others. The questions I gave you. And I wanted to say that. Monday, husband usually also, Wednesday, Thursday, Friday. Saturday, Monday, you have all this.
Yes, please.
Sending all the question. Second question, give your thoughts.
So what's
Okay, bye.
Like, oh, they will keep saying, right? Okay, okay. Hello? Is it a charge around? Hello? No, that's the charger, it's here. It's not that you're not charging. Okay, see that. Don't shut down. Then shall I give it to management? Okay. Now,
Yeah.